The Tesla earnings report is out, and we have some really good news. The final consensus for the earnings was just 80 cents, and Tesla just posted 91 cents. That is crazy good. But the number that everyone was really paying attention to was the gross margins. The Wall Street was estimating that Tesla will post 18.2%, and the gross margin is 18.2%. You can see it right here. That's a pretty respectable number, I would say. I think many feared that that number could have gone a lot lower, but it didn't. Tesla posted a 9.6% operating margin, $2.4 billion of GAAP operating income, $2.7 billion of net income, and operating cash flow is $3.1 billion, and free cash flow, which is really quite an important number in the long term, you could say, although in the short term, sometimes that could fluctuate. But seeing this number being a positive number, that is good news. To put it really simply, free cash flow is basically the money that you keep after doing all of the investments necessary for future growth. And we know Tesla has a lot of plans for growing a lot more in the future. So seeing positive cash flow here makes me really happy. Cash has also increased by 0.7 billion to now $23.1 billion. That's pretty good. I heard Meet Kevin saying that Tesla would have to raise money. I don't think that's happening. If Tesla does raise money, it's not because Tesla has not enough cash. Cybertruck factory tooling on track. That's good. And this is an important piece of information to really pay attention to. Tesla is building Cybertrucks already, producing RS builds, which means release candidate builds. A release candidate in software development terms means a version that's nearly production ready. So it does appear that technically the first Cybertruck that was produced in Austin is not a production Cybertruck yet. But it should be basically the final version of the Cybertruck. And now let's go through this summary of our earnings report. Q2 2023 was a record quarter on many levels, with our best ever production and deliveries and revenue approaching $25 billion in a single quarter. We are excited that we were able to achieve such results given the macroeconomic environment we are currently in. Our operating margin remained healthy at approximately 10%, even with price reductions in Q1 and early Q2. This reflects our ongoing cost reduction efforts, the continued production ramp success in Berlin and Texas, and the strong performance of our energy and services in other businesses. I'm curious how the energy business is really going. Maybe we'll hear more about that on the earnings call. Our commitment to being at the forefront of AI development entered a new chapter with the start of production of Dojo training computers. We are hopeful that our immense neural net training needs will be satisfied using our in-house designed Dojo hardware. The better the neural net training capacity, the greater the opportunity for our autopilot team to iterate on new solutions. Very important. In conclusion, we are focusing on cost reduction, new product development that will enable future growth, investments in R&D, better vehicle financing options. This is what that potential raise could be all about. Continuous product improvement and generation of free cash flow. The challenges of these uncertain times are not over, but we believe we have the right ingredients for the long-term success of the business through a variety of high potential projects. So I think it's pretty safe to say that there is not going to be a buyback anytime soon. By anytime soon, I mean this quarter. The money that Tesla was supposedly going to raise is probably not for the buyback. That to me sounds like it is going to be used just for financing vehicles, basically. In other words, giving loans to customers to purchase Teslas. So operating margin is a bit lower than the previous quarter, but adjusted EBITDA is higher, and the adjusted EBITDA margins are also just a little bit higher compared to the last quarter, by just a little bit. And the EPS beat is certainly quite impressive compared to what the expectations were. Let's take a look at what Tesla says is helping them and what is not really helping. In terms of revenue, one of the things that is helping Tesla is growth in vehicle deliveries, obviously, growth in other parts of the business. What is not helping is reduced average selling price year over year, excluding currency exchange impact. And the negative currency exchange impact is equal to $0.6 billion. Wow. Profitability, what's not helping it, reduce average selling prices due to mix and pricing, cost of production ramp of 4680 cells, and other related charges. Increase in operating expenses driven by Cybertruck, AI, and other large projects. This I'm totally okay with. And the negative currency exchange impact. What's helping profitability? Growth in vehicle deliveries despite margin headwind for underutilization of new factories. Lower cost per vehicle, which includes lower raw material costs and IRA credits. These are the Inflation Reduction Act credits. Gross margin growth in energy business, as well as services and other. That is interesting. Tesla also says that they did repay some of the debt, which is why the cash, the cash did increase, but they did pay off some debt, so it may not have increased as much as maybe you would have expected if none of the debts were repaid. We got production numbers. Tesla confirms that the total production is 479,700, 86% year-over-year growth. That's, when you really think about that, that's a high number. Although, we got to remember that last year in Q2, we had some hurdles. So that's good. Superchargers are we now have more than 5,000 supercharger stations, 33% year-over-year growth. That number may actually accelerate if Tesla. Oh, by the way, Tesla just made a deal with Nissan. Nissan is going to be using Tesla superchargers also. And this slide does confirm that indeed Cybertruck is not in actual production yet. So that Cybertruck indeed that we saw is definitely not a production Cybertruck. Otherwise, right here, it would say that Cybertruck is in production instead of saying that it's in tooling still. And I can't help but smile looking at this number. This is market share of Tesla vehicles by region, trailing 12 months. Obviously, the number is going up. Good. More updates here. In Q2, we produced a record number of vehicles thanks to ongoing ramps of our new factories as well as strong performance of Shanghai and Fremont. We remained committed to smoothing deliveries throughout the quarter by reducing the percentage of vehicles delivered in the third month. We did see that. This is actually happening. Vehicles in transit, test drive, and display vehicles account for a substantive majority of our total days of supply. Now that is interesting. Test drive vehicles and display vehicles. That's good to know. I do remember one time when I went to a Tesla, you could say dealership, and I wanted to test drive a car and they had no cars to test drive. I was not, well, as an investor, I was happy, but as a customer, I was like, I just came here for nothing, basically. US, California, Nevada, and Texas. At Gigafactory Texas, in addition to the continued success of the Model Y ramp, we are also working on equipment installation for Cybertruck production, which remains on track for initial deliveries this year. Not Q3, but this year. Okay, that's a little bearish. We have had notable progress on yield improvement of our 4680 cell production lines. Very bullish. We continue building capacity for cathode production and lithium refining in the US, China, and Shanghai. Since our Shanghai factory has been successfully running near full capacity for several months, that's good. We do not expect a meaningful increase in weekly production run rate. Gigafactory Shanghai remains our main export hub. And then Giga Berlin update. Our factory in Germany produced standard range Model Y vehicles in Q2 for the first time. Building off momentum from its success in Q1, Model Y was the best-selling vehicle of any kind in Europe year to date, based on the latest available data as of May. And I saw another article earlier today that has been true for the first 6 months of this year. So that's really good news. And check this out. I love this chart. Cumulative miles driven with FSD Beta in millions. As you can see, that number is starting to really take off. For a little while, the growth did not seem to be exponential, but now it is clearly exponential. Good news. Artificial intelligence, software, and hardware, 4 main technology pillars are needed to solve vehicle autonomy at scale. Extremely large real-world dataset, which Tesla has. Neural net training, which Tesla is pretty good at. Vehicle hardware and vehicle software. Tesla has both of these. We are developing each of these pillars in-house. This month, we are taking a step towards faster and cheaper neural net training with the start of production of our Dojo training computer, vehicle and other software for customers getting a Model 3 or Y for the first time. We launched the Get to Know Your Tesla experience, where users can adjust their seats, mirrors, steering wheel, set up the phone key, and learn about topics such as regenerative braking. To help customers discover ongoing improvements and software updates, we now highlight new features directly in the UI, encourage users to try features they may have missed, and added the ability to search controls. Searching controls, that has been a good update. I really love that one. Because sometimes Tesla changes where things are and then I can't find it, and then now I just search and it works. Perfect update. Battery, powertrain, and manufacturing. We are now testing Cybertruck vehicles around the world for final certification and validation, and we see Cybertrucks going around every single day, literally. This might be the most unique vehicle product in decades. With that comes trialing and testing new technology. As far as we know, Cybertruck will be the first sub-19 feet truck fitting into a garage. I'm still a bit worried that it may not fit into my garage specifically, but hopefully it does. That has both 4 doors and 6 feet bed, and a 6 feet bed. Both technologically and architecturally, this vehicle will break a lot of boundaries, very much in line with how we think about vehicle engineering and manufacturing. So, I think overall this paragraph was a bit bearish, short term. Long term, very bullish. Short term bearish because they said that with all of this innovation, basically, comes trialing and testing new technologies. So maybe not in Q3, huh? Then we have an important update about energy storage deployments. We can see this looks all right. Now, keep in mind that these are somewhat, they can be a little volatile because Tesla may get a huge order, but then it takes a while to deploy. So I'm not sure if this graph is really the best representation of how that business is actually going. Energy storage deployments increased by 222% year over year in Q2 to 3.7 gigawatt hours. Another strong quarter due to the ongoing ramp of our first dedicated Megapack factory in Lathrop, California. The ramp of this 40 gigawatt hour mega factory, the first of many, has been successful with still more room to reach full capacity. While energy storage deployment rate can be volatile due to project timing, which is what I just mentioned, production rate improved further sequentially in Q2, and that is really good news. Services and other business. The second quarter of 2023 has been the quarter of supercharging. A significant number of companies, including Ford, GM, Mercedes, Nissan today, Polestar, Rivian, Volvo, and Electrify America have announced adoption of NACS, a charging standard developed by Tesla over a decade ago for their North American products. Further opening our charging network in 2024 will enable both faster market conversion from combustion vehicles to EVs, as well as faster growth of our charging network through a larger addressable fleet, which will overall make the Tesla customer experience better because I will not need to take detours anymore when I go on road trips, which I do sometimes take these little detours, and it's okay, but it can be a little annoying. All right, let's take a look at this. This could be quite important. Tesla is giving us their latest delivery volume expectations for this year. We are planning to grow production as quickly as possible in alignment with the 50% compounded annual growth rate target we began guiding to in early 2021. In some years, we may grow faster, and some we may grow slower, depending on a number of factors. For 2023, we expect to remain ahead of the long-term 50% compounded annual growth rate with around 1.8 million vehicles for the year. So no increase here. I think that's actually I think Tesla can beat that 1.8 million number with, I mean, the last number that Tesla posted was pretty impressive. Cash, we have ample liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage that business such that we maintain a strong balance sheet during this uncertain period. Meet Kevin was talking a lot about Tesla having to raise more money, and Tesla did not have to say in here that it will need to raise money. By the way, Mikame has been saying that. I remember he was saying that a year ago already. Profit, while we continue to execute on innovation to reduce the cost of manufacturing and operations over time, we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. Product Cybertruck remains on track to begin initial production later this year at Gigafactory, Texas. In addition, we continue to make progress on our next generation platform. All right, so I would be guessing not in Q3, although Tesla could be sandbagging here. Maybe on the call, Elon's going to say, you know what, maybe Q3 is still happening. But it does sound quite unlikely after going through this report so far. A few photos and charts. Ooh, this looks cool, but somehow very low resolution. This is not because my screen is low resolution, this is because the photo is rather low resolution, but looks pretty cool. Oh, I like this one. This I love. This is nice. Next one. Cybertruck is being produced over there. Lots of robots making vehicles, and we already saw this picture. Some key metrics: vehicle deliveries up, operating cash flow, net income. Then we have, this is, yeah, this is one of the nicest charts ever. Operating cash flow, net income. Then we got year-over-year revenue growth. It has slowed down, but compared to the auto industry, Tesla is certainly doing pretty well. And if you look at S&P 500, also year-over-year revenue growth has slowed down, and for Tesla it is also the same. So you got to understand there's this macro economy that is also impacting Tesla. Operating margins for Tesla in red here, a little lower, but auto industry is a lot lower than that. And remember, these are mostly internal combustion engine vehicles, not EVs. Every single company that is not Tesla and makes EVs is losing money pretty much making EVs. And you can see how Tesla compares to S&P 500, which is pretty good so far. And then if you like to pause and take a look at any of these for a little while longer, you may do so at any moment. I'm just going to go quickly through these because I need to get ready for the Q&A call. All right, guys, this has been fun, and I will see you in the next video. Thank you so much for watching.